Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, March 11th, 2021. We'll keep it brief. I'm not going to touch on gold, oil, and treasury bonds. Covered those in the video earlier today, and there's really no change there. Not much of a change in the market since the last update, but I just wanted to do a quick market wrap here and show you what I'm looking at. All right, so QQQ pretty much end up closing the day right on that midpoint of that channel right there. And I'm referring again to, I know it's kind of a busy chart here, but the yellow lines that kept this recent trading range here we were in at this point. That's the midpoint. You can look closely. You'll see quite a few reactions, either candlestick bodies and or shadows, a skinny part on that level, the midpoint. And I always say that's often the case anytime I find a channel, whether it's a horizontal price channel or a ascending or descending channel. Usually you can draw a line in the midpoint or roughly the midpoint, and you'll see reactions. You'll trade above there, and then when you break it, you go to the bottom, and so forth and so on. So it is resistance. It's a minor resistance level, and that's where we close today. So just to kind of recap what I said earlier, the market's going to do what it does, and like I said, this S&P 500 and the small caps have been very resilient. This whole thing here, this was technically a correction, 10% drop in the Nasdaq, and the million-dollar question: is that it, or is it over? We did hit that preferred swing target, that 297 target. I have potential additional targets that still might be hit, but the way it works is, ideally, we would have turned back down there. That should have been pretty significant resistance, the 310 level. We backtested a couple times as mentioned. So when we popped here, what has happened? It did not eliminate the scenario or the possibility we might go down, but it certainly, I think, reduced the odds. So where, let's say, just pick some numbers here. I'll try to be accurate with this somewhat. Whereas at this point the other day, last few days until recently, I would probably have put 70% odds that we'd go down and go on to break the lows from what was that? What day? Friday. Yeah, last Friday's lows, where I would have put it about maybe 70%. Once we started taking back the bottom, that support, that 310.27-ish support, that reduced, but certainly didn't eliminate the odds. I'd probably put it at even better than 50%, but only slightly. Let's just call it coin toss odds, and that's why I'm in wait and see mode right now. So we could still very much turn back down and go on, but until and unless we break the recent lows in the S&P 500 and QQQ there, we have to respect the fact that support has been defended and the buyer stepped in aggressively. So. And remember, nothing has changed. Everything, I've done videos and quite a bit on the long-term charts, and that the long-term charts to me still say this was a pretty powerful longer-term sell signal here on the weekly chart a couple weeks ago. Again, took out the trend line off the March lows in QQQ and took it out with conviction. Two big red candles, and just about every correction, every time we had a trend line taken out here with a big red candle, and you're going to get kickback rallies. And as I talked about, they're going to measure anywhere from usually 5-10% or more, these snapback rallies. We had one there. We had a big sell signal back here on a trend line break, big red candle, and you had a nice snapback rally for a couple weeks, and then you continued lower. So by no means has the potential for a much bigger drop come. It just, as I said earlier, taken in a lot of aggressive buying, good volume, and a lot of stocks hit support, and that's it. That simple. I wish I could say anything else, but you got to turn down and you got to get take out those lows. But as I said, I think if we start to do it, a lot of buyers stepped in there in the last few days. You can see, well, I don't have the volume price histogram bars on, but should we get another thrust down, we could certainly see a lot more selling. By the way, this is the Fibonacci retracements. If you see this blue line right here, from the top, the recent highs, down to the bottom, this blue line here measures the Fibonacci retracements. We closed right about today, right about or just a slight hair above that 50% Fibonacci retracement. What does that mean? These are your big levels, 38.2%, 50, and 61.8. There are some other Fib numbers, but these are typical anywhere from the 38.2 to 61. So this range right here, I don't know if you can make out in the video, the 61.8 Fib is right here, and the 38's down at the bottom of this box. So that's a typical retracement range for a counter trend move if there is going to be a larger move. You start taking out that 61.8, well, what it's going to do, and again, if you can't make it out in the video, I know sometimes it's hard to see on this black chart, you have two major reaction highs right here. Here and here on QQQ, and they're at that 340, 324.32 level, and the 61.8 is just a hair below that. So this to me, this right here, roughly again 324.30 or so, is a big level on QQQ. And what that means is if we take it out, it's just going to further increase the odds that the market's going to run and make a new high in QQQ. And then I went over that earlier. It's not going to change the long term, any marginal new high. Now we go up 30% from here. Yeah, that's going to wipe out or have a good chance to wipe out the divergences and it will change the technicals. But a marginal new high of a few percentage points, 1, 2, 3, 5, 6% on the daily charts and the weekly charts will not change anything on the technical outlook. But you don't want to ride that out of shorts. So, I made it clear before. I wouldn't be adding shorts at this point. It's kind of wait and see mode. And whether you want to, or it's the same thing with adding longs. I've had a couple questions. People I know personally that this was a great time because not just QQQ but all those other large cap blue chip stocks that I mentioned, Amazon, Microsoft, Home Depot, Walmart, they all hit support at the same time. So there was a good time to buy. But at this point, do you buy right now? No, I think you hold off and wait to see some of these resistance levels such as this downtrend line on J&J get taken out. And you can always layer in more onto those longs. So that's my thought. Those are my thoughts. And let me show you a couple other things, and we'll wrap this up. Update on the VIX. VIX volatility index. We're still above the big level I've been watching here for a while on the daily chart of the VIX is about 2042. Really nice support. We can even roll back further and see that support for a long time with a lot of reactions along there, especially recently. So the VIX is still there, and what the VIX does, when you come out of a trading range, the VIX had a lower floor right here. That was support back then. This was support during that period of time. And what happens if I don't have a chart of the S&P up, but you can take my word for it or look it up. When you see these big spikes or any decent spike, those are corrections. And the bigger the spike, usually the harder the market's falling. That was a drop into the March lows last year when COVID hit. That was that big fourth quarter, that was in 2018, early 2018. There was a drop in the fourth quarter of 2018 right here. And so my point here is you get these little shots across the bow, these early little spikes there, and eventually after a couple of those spikes you usually get the big move. So once you come down to support, you fall to support, you have these little corrections here that cause these spikes, and then finally the big one. Well, we've come down to support and we've had a few of those spikes so far and we're still at support. Now, one of two things: if we're going to have some big a strong, whether it's a blow off top or just a powerful rally in 2021 still to come, which is possible, then you'll probably see the VIX break support. And if it does, we're probably going to fall to this range. So this would be a bullish scenario for the stock market. It's certainly a possibility, and it's one thing I'll be watching. Does the VIX come under here? But until then, and this meshes with my my outlook for the market, you have this positive divergence right here. You can see my divergence is marked down on this daily chart of the VIX. So this bullish divergence, we had divergence there on the RSI. We had both on the RSI and PPO there. There was divergence. And that was the technical catalyst for these pops in the VIX, which were also corrections in the stock market. So remember, we just put in a divergent low. And if we come back and we're coming close to there, we make another run down at or even just below, as long as it's not too far below. You're talking a solid close, a daily, a weekly close, well below 2042. You still have this divergence, which could be, you had it here, and see that was the catalyst right there for the big pop. So that's the VIX, and remember, the VIX is almost a mirror inverse of the S&P 500. Sometimes it'll give us predictive value. The VIX will start moving up in advance of corrections, and sometimes it's a coincident indicator. It spikes when the S&P drops. Yeah, that's about it. I noticed one of the stocks that caught my eye today was timber. This is up here. Let me get rid of this one. Right here, you can see my. I remember a few weeks back, I put together what I called a junk stock list. I give you guys junk, what I called junk trade idea, junk stock. They were just low quality, but again, I said each and every one, I wouldn't share it if it didn't have potential as a trade. Timber had a big move today, and it broke out. That's why I'm bringing it up, not just because it was up 70, another 75%. You know, that one was mentioned off this divergent low back here, bullish divergence, timber pharmaceuticals, and we hit my first target zone of 285 to 307 back here, and we had a pullback as expected. The initial tag of a price target, typically you get a reaction. That's the reaction. We hit it, pulled back. You know, it was a healthy pullback. Remember, it was a low price stock, made that very clear, high risk, low price, but also high profit potential. But today, and this is one to watch tomorrow if we can follow through, could be a momentum overshoot, but it was a 75% gain today, and it broke out. And the fact that we already checked it once, if this was the first run through my target zone, I would say, no, probably an overshoot, wait for a pullback, and then the next break. But we already hit it once, so should this one follow through tomorrow, that would potentially open the door to that next target I had up there at 978 and the downtrend line right there, and that would be from where we closed today. If it's hit, another 165 or so percent. And there's, you know, I could go through them all. Obviously, with the, especially with the small caps being strong, a lot of those, you know, lower quality trade ideas I shared, you know, have been going up and are still going up. And you know, so there's still that what I call dash for trash, where fundamentals don't matter so much. It's whatever the Reddit crowd's pumping or whatever people are seeing. You know, a lot of people are looking for stocks that haven't, you know, already, the train hasn't left the station. Stocks that aren't at 52-week highs or above and overbought. So that's just one of many. And I'll try to update some more of these in case we. In case the correction in the Nasdaq, which was again a decent correction, and in case that is it, I'll share trade ideas, both long and short. But I'll look for some longs as well, some additional longs, and you know, additional to the ones I posted the other day. And I still got to get back to you guys on the gold stocks. Hadn't had a chance today to follow up on that, but I'm putting together a list of some of my favorite gold and silver miners, and I'll get that out to you guys soon. All right, and finally, since it's a very short video, we're only 12 minutes into it, I'm just going to a quick update on the FAAMGs. Because remember, to me, these are the market leaders. These have been the market leaders for years. They have a very significant impact on the market, not just from a psychological perspective, because these are the widely held, you know, crowd favorites, but also from the fact that they have the heaviest weighting in the indexes, the S&P 500 and Nasdaq 100, and that's Apple. So where is Apple? Well, Apple's still below that 125.75 price target slash former support, now resistance. We broke it, flagged under it, went down. So Apple is still in, it is not in a bullish, it's in a more bearish posture. It is in a near-term correction mode. Certainly had a correction, you know, where the Nasdaq itself fell about 10%. Apple has dropped, was about a 20% drop off the high, nearly double that. And I just want to mention, there's no evidence of a trend reversal yet. A downtrend is a series of lower lows and lower highs. And so where does it start to change it? Well, if we get back above 125.75, and more importantly, this reaction high right here. So I just wanted to say that you know, it's not smooth sailing, guaranteed new highs right now, and that's where, you know, there's still the potential this market could take another leg down soon. And so there's Apple, Microsoft. I've covered this one quite a bit lately. You know, objective long entry on the back test at 228.16, where the buyer should have, and so far did step in once again, rallied it up a little bit, but right there, if you remember today in the video, there's gap resistance, and that's the gap right here. And you can see it was backfilled or back tested from below once, twice, three times, almost four. And again today, they tried to they got into the gap, but they couldn't hold it. And you can see the body of this candle is down below there. So look, pretty simple stuff. If Microsoft can pop that and pop above that gap around 240.23, there's not much. There's really thin air between that and new highs. It's not going to change the longer term charts, but it'll change the near term outlook. It could certainly be good for a 5+% rally in the near term if that happens. Otherwise, if you get an impulsive rejection here, and especially if you come back under those recent lows, well, that can be and will be bearish. So we'll watch. I'll be watching that one. Amazon, another big, market-leading stock, obviously, still in its multi-month trading range, like so many of these big things. So, rallying the last few days, like everything, as it should. It hit support, but it's still below that, and it's below this downtrend line or uptrend line right there, and at that 330.87-ish resistance as well, or that was former support. Lots of reactions on that level. So here's another one that could be, this may just be a bounce back to resistance in a near-term downtrend. Alphabet, GOGL, big level right there, 2005 right there. Big support. You got a gap right there, and you've been holding that gap on, look at that, 1, 2, 3, 4, 5, 6, at least 6 candles have touched that level since we've had that gap. So on a scale of 1 to 10, that's close to a 10 right there for a support level. I can't guarantee, but I can assure you there's quite a bit of stops there. If it breaks that level, that's going to be bearish. Otherwise, as I like to say, support is support unless taken out. So you can't write this one off. As I said before, that is one of the more bullish, stocks of the big market-leading FAANGs. And if you take a look at this box right here, there's a recent consolidation range. So it's, at the risk of oversimplifying it, a break above the top of the range, a solid break bullish, and a break below bearish for the near term or intermediate term. And then there's Facebook, and again, bigger picture. Let's not lose sight of that. Many of these FAANGs are in multi-month trading ranges going back to July of last year, and that's what Facebook looks like, this big box right here. But very near term, it took out the downtrend line. I pointed out a triangle pattern the other day, said, downside break bearish, upside break bullish, and look, took it out. Upside break, and it's moving up. So for the time being, a very near-term bullish price action, but there's plenty of resistance overhead, including the top of the trading range and the downtrend line I just showed you there, which come in together. So, yeah, we're not. It is not, all clear for a breakout to new highs in the Nasdaq 100 yet. If it starts to do that, takes those levels out, absolutely. But if we get rejected, then the levels to look for on the downside, including this uptrend line right there. All right, so I already covered Alphabet, the other share class, same level right there on the GOG. Tesla, I've covered it today. No updates since I mentioned it earlier today. Took out this trend line, but not much follow through recently. Tesla feels very heavy to me. I think that one's probably going to lag behind. I think and underperform. Big sell signal on the weekly. Again, that's what I jump every now and then over to those weekly charts. That was our primary uptrend line on Tesla. We broke it there, back tested, set up a parallel channel below the main trend line, broke that, and a lot of red sticks since. So all this is just one green stick, bounced off that 40-week moving average right there, which is the same as a 200-day moving average. That's a big level for a lot of tech stocks. It's resistance when you're below, like it was here, resistance, boom, broke it with a big green candle, didn't limp above it, just impulsive breakout, back tested it and held. We hit it and we bounce. So this is a big level, and it coincides or meshes with everything I've been saying, is that again, if we reverse here in the next week or two, and a lot of these stocks take out the recent lows, they're going to break some significant technical levels, and including this 40-week/200-day moving average on Tesla. Otherwise, hey, it's in a bull market. Buy pullbacks to the pullbacks to support, and so the case can be made, to be long Tesla for another leg up and to new highs. And if you do that, then just put a stop not too far below there. Ideally on a weekly basis, although you got to watch this one. If Tesla cracks intra-week, so when you're using a stop on a weekly basis, it can get tough, because let's say you break it on Monday, and a stock like Tesla can fall 20-30% by the end of the week, because it moves that much. And so you'll have to, that's kind of not so easy to Always use a stop on a weekly closing basis for a stock like this. Just look at everything else. If you're trading Tesla and it breaks that level, look at the rest of the market leaders and the indexes. Are they above support, or are they starting to crack as well? And that might make your decision a little easier whether to hold, give it a little more room, or to cut it loose. Other than that, successful test of support after a long overdue correction, and so who knows, maybe it has more upside, maybe not. And then finally, a couple more that I watch in the NASDAQ 100, including Intel. Intel, let's jump back to the daily chart here. Big level on Intel. I'm going to draw it out. I know this chart has a lot of lines here, a lot of color, but right there, that line at about 64 or so, big level. It was a gap up here, successfully back tested when you couldn't hold. That proved to be a false breakout, aka bull trap, and boom, the bottom fell out. Ran up to that same level again, couldn't get it, boom, the bottom fell out again. So what it is back down, top of the trading range, back to the bottom, all the way to the top of the trading range, back to the bottom, all the way to the top of the trading range, big level. So if Intel can clearly put this level, that 64 in the rear view mirror, that's nothing but longer term bullish. And if it fails once again and starts to go, head down impulsively, and we start to see some other market leaders and the indexes crack, well, you're probably coming back down to the bottom of the range, which is $43. That'd be a big swing. Was it pointed out here as an objective long bullish last time we got to the bottom of the range, and there it is, went all the way up to the top from there. And last but not least, Netflix. Like to keep an eye on this one. And same story. Here's another big market leader, or the N in FAANG. If you want to go FAAMG, I like to use FAAMG. But there it is. That is our multi-month trading range. That is super well defined, and like so many, I can put a line, as I've done, in the midpoint, that yellow line, and we're pretty much back testing it from below. Usually, no guarantees, but often when you crack below the midpoint channel, you're coming back to the bottom of the range. Or if you can't get above it, you tried there, failed. Although I will say no, that we didn't fall all the way to the bottom there. But you get the point. Most of the time you crack above it, you're going to hit the top of the range. And when you gapped above it there, you hit the top of the range. The midpoint acted as support, back to the top. Midpoint again, support, bounced, and now broke it. So support, once broken, becomes resistance. So if Netflix can power up a little bit more from where it closed today, great. Probably have another run at the top of the range, and then uber bullish. Ultimately, this range is going to break one way or the other. However, if we fail here, tomorrow's a down day for this and a lot of others, there's a good shot you're going to run to the bottom of the range. And then, so these are the big levels. Which way does this range ultimately resolve? So those are some of the things I'll be watching. All right, let's wrap it up here. And like I said, I'll start to try to sniff out some more individual trade ideas, and just kind of, as far as the indexes go, kind of in wait and see mode right now. See what happens the rest of the week here. This has been Randy Finney with the Right Side of the Chart. Have a great day.